China's share in the international goods trade has risen significantly over the last 3 decades. It accounted for 12.3% of the global share in 2023, ahead of 11.4% of the European Union and 10.8% of the United States. This has given rise to speculations that Chinese renminbi might replace the US dollar as the global reserve currency. However, there are several constraints that limit renminbi's acceptance as an international currency. First of all, the Chinese renminbi is not fully convertible in the capital account. This means that China restricts investments in foreign currency in the capital account, that is the foreign portfolio and foreign direct investments. The restrictions increase the risks for investors as the Chinese government can change the regulations at any time. The uncertainty reduces their ability and inclination to invest in the Chinese financial assets. Consequently, the Chinese currency market is not fully developed yet. Poor market reduces the incentive for foreign central banks to maintain their reserves in renminbi, as they can't invest those reserves productively to get financial returns. At present, renminbi accounts for only 2% for foreign exchange reserves. The level is not expected to undergo any significant change in the near future. Second, China's economy lacks full transparency. All the data related to the economy are strictly controlled by the Chinese government. Several economists have criticized China for withholding certain economic data points, particularly those that might reveal weaknesses or vulnerabilities of China's domestic economy. Even though China has made efforts to improve the quality of data, investors and analysts remain skeptical. This general skepticism around the transparency of the Chinese economy is another disincentive for foreign nations to keep their reserves in renminbi. Third, the Chinese economy may not be able to displace the US from its number 1 status anytime soon. Many economists were predicting that China might surpass the US in terms of the GDP by the end of 2030s. However, the latest trends indicate a sort of economic stagnation in China, while the US has maintained a steady growth. Though much will depend upon whether the US is able to maintain an edge over China through cutting-edge technologies like AI and quantum computing, for now it seems the US will remain as the number 1 economy in the foreseeable future. Fourth, as China has progressed, its per capita income has witnessed a sharp increase. Consequently, the wages have risen and China is losing its edge in manufacturing. China is now shifting its focus on high-value manufacturing and boosting domestic demand to keep its economic growth engine running. However, it means that low-value manufacturing, that drove China's export-led growth over the last 3 decades, is now shifting to countries like India and Vietnam. Hence, China's share in global trade might stagnate or come down in the future, and this will reduce the need to keep renminbi reserves for trade. Fifth, the euro has been in circulation for more than 25 years now. It is the predominant currency for inter-European trade. The European Union and China have almost similar share in international trade. The financial markets in Europe are much more developed and open compared to China. The euro is a fully convertible currency and has no restrictions. Yet, the euro hasn't been able to displace the US dollar as the international reserve currency. Given the constraints facing the renminbi, it appears rather difficult for it to replace the dollar. Sixth, international groupings like BRICS have taken some initiatives to reduce their dependence on the US dollar and counter what they call as weaponization of the dollar. The group may reach some internal consensus regarding the intergroup trade. However, India and China are bitter rivals over the border dispute in the Himalayas and share a complex relationship. There is a low possibility that India will accept renminbi as the reserve currency for settling trade with the bloc. In conclusion, a lot of dynamics are at play, and predicting the future is difficult. Yet, at the moment, it is prudent to assert that the US dollar is more likely than not to maintain its dominance in the global financial system. For more such videos, please subscribe to the Knowledge and Learning channel.